Finance Minister Nirmala Sitharaman has promised a budget like never before, and we are here to talk about the upcoming budget with the former Deputy Governor of the RBI, Mr. Rakesh Mohan, joining us today on ET Now. Sir, appreciate you taking your time out and speaking with us today on the state of the economy and what can one really expect of the upcoming budget. So let me first welcome you on the show and begin by asking you about some of the constraints that Finance Minister Nirmala Sitharaman has just about a week to go for the upcoming budget. She has promised a once-in-a-lifetime budget, a very crucial budget in independent India's history. However, weak revenue growth, weak growth itself seems to be a big concern. I want to understand from you, at a time like this, what should be the key priorities for the Finance Minister?
It's obviously a large question, which is not easy to answer. But I think obviously the objective of the finance minister has to be a resumption of the economy and bringing it back to some degree of normality by the end of the fiscal year 21-22, so that by 22-23, in the year 22-23, we can hope to come back to a growth path that comes nearer what it was in the first decade of the century, that is, say, from 2002 to 2012, when we had 7-8% growth. But the key point, obviously, is restoration of the economy for the coming year. And within that, of course, there are many issues to be solved. But I would say that the first priority is to roll out the vaccination program in a credible fashion so that full activity can be restored sooner rather than later, and that people's confidence in resuming normal activities is restored. And that obviously means mass vaccination. But for that to succeed, people have to be given much greater confidence than exists today, as far as I can see, in terms of the safety of the vaccination program. So I think that the government, now that's a larger issue than the budget, but to my mind, that's the number one priority to restore the economy. And within that, of course, to provide adequate funding in the budget, both to the central government through its own avenues, to the state governments to carry out the program, and possibly schemes for subsidizing the private sector to do the vaccination program. So that's, I think, priority number one. Second priority, I would once again say in the same vein, is continued protection of the least well-off. We don't really have adequate data in terms of how well people have recovered at the bottom of the pyramid. So continuation of generous and well-administered food programs through the PDS or otherwise.
You know, you pretty much preempted my next question. During the pandemic, sir, we have seen that the informal sector has been really impacted, due to the lockdown, due to the pandemic related, closure of companies and many more other things that have happened as well. While on one hand, all these areas are important, the areas of healthcare, infrastructure, to give more money in the hands of the poorest of the poor, things like DBT as well that you mentioned. Talk to us about what does the finance minister need to do to ensure that the jobs that we've lost, because that seems to be critical, the jobs that we've lost, we're able to do something on that front as well.
Yeah, well, the first thing, Ruchi, is that one needs, as of now, at least in the public domain, as far as I'm aware, there isn't information on what jobs have come back, in which areas and where they haven't. So two observations there. One is, of course, the whole hospitality area, whether it's small dhabas to large hotels, fancy hotels, the whole transportation system, both public and private, and of course airlines. So, but one, I think the finance minister, I hope, has a grip through government sources of adequate information where the problems exist, because I think it's not in the public domain. Now, purely on a sort of a personal observation basis, I sort of see some puzzles here. That whereas people like us are happily sort of sitting at home, working from home, etc., 90% or more, 95% of people don't have that privilege of being able to work from home. So on that scale, one would imagine that there are actually a lot of people in the informal sector who have gone back to whatever they were doing. But one just doesn't have information on this. So I think that the key point is that I hope the government has information on this, and then they can work out schemes to actually revive the informal sector.
Right. Oh, absolutely. In fact, I want you to wear your, chief economic advisor's hat as well, the former chief economic advisor's hat as well, and want to understand from you at a time like this when we're coming out of the pandemic and the government is saying that high frequency indicators are showing that things are moving in the positive direction. We will be seeing a V-shaped recovery. In fact, the first advanced estimates are showing that the Indian economy is likely to end the year with a contraction of 7.7%. And yet, on the other hand, you have the Indian markets that are now, touching that momentous 50,000 mark as well. I want to understand from you, from your experience in policy making, from your experience with speaking to various stakeholders who are associated with the financial markets, with the equity markets as well. What explains the disconnect between what's happening with our Indian markets as well as the real economy?
Well, Ruchi, as you would know, this is a global disconnect, not just in India. So the US stock market, for example, has also been surging to unprecedented heights. And the key explanation, as far as I understand, in reading the data, reading the tea leaves, etc., is really the huge excess liquidity that central banks globally have injected into the system. And of course, we have done the same. So here, for example, with all the various measures the Reserve Bank has taken, in my view, the right measures, the liquidity overhang is huge. So that every day the Reserve Bank is absorbing, banks are putting in something like 6 lakh crores of excess liquidity into the Reserve Bank's liquidity adjustment facility. And that gives you an idea of how much excess money there is around. Same thing in the United States, in Europe and elsewhere, where central banks have injected liquidity through large buying of government securities, of U.S. treasuries, etc. There, that the increase in liquidity hasn't really been going into new credit, and therefore, what's been happening is that particularly with interest rates essentially near zero in the developed world, also lower than inflation in India, that really the only place for people, institutions to invest is indeed in the equity market. And therefore the equity market has been surging everywhere in the world.
Right.
And of course, there's the IT sector, which of course with work from home and everything else, has been booming in reality as well. So there is, of course, particularly in the US, it's the IT firms of different kinds, whether it's Amazon, whether it's Facebook, Google, etc., who've been booming. So that's the disconnect between the real economy and the stock market. And whereas in some ways it's welcome news, the stock market is surging, so that that does lead to a certain degree of increased confidence. On the other hand, we should not be fooled by the stock market into believing the real economy is doing very well.
Absolutely. Oh, absolutely. In fact, while we're talking about, the upcoming budget, and while a lot of policymakers are taking heart from the fact that we are seeing a 50,000 level as far as the Indian markets are concerned, I want to understand from you, the budget is just around the corner. And this time around, even in the previous budget, the finance minister had said that she will be meeting the 3.8% fiscal deficit target. And then the pandemic happened. So we're now looking at closing the year with a fiscal deficit of close to 7 to 8%. However, having said that, it's not about this year, it's about the fiscal consolidation that we will see, the roadmap that we will see, the FRBM roadmap that the government will put out in the upcoming budget. I want to understand from you, what does the government need to do at this point of time, and also at a time like this when calls have been made for a fiscal council as well? Do you believe that this could be the right time to bring in one?
Well, let me first say that, as I said right in the beginning, the first responsibility of the government is to indeed restore the economy. And if that does mean excess expenditures and a higher fiscal deficit for 21-22, so be it. Because if you don't do that, you will actually have a worse fisc in 22-23. Because what you need is for the economy to recover so that the GDP goes up in 21-22, and so the denominator then goes up, and so the fiscal deficit and of course debt as a proportion of GDP will then come down, all other things constant. And of course, you need, if you do need to borrow more, so be it. So I would be much less worried about the fiscal deficit for 21-22, of course, within bounds. I would, however, want to caution in that what you need to have is a more medium-term perspective, so that while you have higher expenditures to kickstart the economy further and to restore the economy in 2021-22, what you want to do is to give a message, including with prospective measures and programs, on what the plan is to restore the fisc, say, over the following 3 to 4 years. Because the higher growth that you're going to get in the GDP, in the economy as a whole, the more sustainable the fisc can become. So what that also means is that you have to, that apart from total expenditures, what is also important is the composition of those expenditures. And in the composition, first, as I mentioned, you need to do welfare programs, you need to do food programs, vaccinations, etc. Along with that, I would place much more emphasis on investment, both in soft infrastructure as well as in hard infrastructure. One of our biggest failures over 70 years since independence has indeed been health and education. So I would place a very high importance on increasing government expenditures, public expenditures, both the central and state levels, in health and education expenditures, because our public expenditures in both these areas are among the lowest in the world as a proportion of GDP. Now, there are implementation issues, which obviously can't be done overnight, but I think that's one indication that must be given, and expenditures increase. Second, as I said, in hard infrastructure as well, to just have a very credible public investment program in infrastructure of different kinds, again, both the central, state, and I would say also at the local government, that is municipal government level as well, and to find ways and means of financing it. I have suggested, by the way, in this context, that when I talk about the composition of expenditure, as far as hard infrastructure expenditures are concerned, I think that it wouldn't be a bad idea if the government actually labels some of its borrowing into what you might call infrastructure bonds. They would be no different from normal GSECs, but a guarantee, assurance that what you raise from those bonds goes into a public account, and that it doesn't get dispersed except for an identified list of projects, so that people have confidence that the increase in the fiscal deficit is going into these productive activities, And I would be pretty sure that the credit rating agencies will look at that in a positive fashion.
Oh, absolutely. Infrastructure bonds is in fact a great idea so that we know that where the expenses in terms of the government are really going. Having said that, while we're talking about resources, and that has become a big pain point for the government, we have been seeing that even though the Indian markets are doing very well, the government's privatization process has really been a non-starter. Last year, due to COVID-19, a lot of it could not be done. A lot of it is now in the pipeline. Just want to understand from you, because now even top bosses of India Inc. have also called for a very aggressive privatization drive. What should the government do to walk the talk on the disinvestment front as well? Because raising resources will be critical as much as, spending in the right direction would be.
My first point there is that the disinvestment or the privatization program should not be motivated by raising resources. Let me just repeat that the privatization or disinvestment program should not be motivated by raising resources, because in that context, looking at the flow of funds, that when you raise resources through privatization, there's less available in the market for the private sector to raise for actual private investment itself. So I would first say that we need to take various actions to increase private investment, which has been low since 2012. Having said that, I would then go on to say that the privatization or disinvestment program must be such that it is with the motivation to improve the productivity of the public sector enterprises that are being privatized or disinvested in. And therefore, what I would also say is that what you need is a credible program listing the companies that you want to privatize. And I would say privatized rather than disinvest in a non-financial sector enterprise. There are lots of them which actually don't do very much indeed, don't do very much at all. So, for example, I was glad to see recently the announcement that Scooters India will finally be privatized or closed down. That you have a number of such enterprises which have been doing nothing for 30 years, 25, 30 years. So you must get rid of all these enterprises which may have land, which may have other resources that can be used. And therefore, yes, to the extent that you can raise resources, fine. But I think that the emphasis has to be on the productivity raising potential of privatization or disinvestment.
Right. Before I let you go, and this is going to be my last question, the government also, sir, is looking very closely at financial sector reforms as to what needs to be done with respect to, privatization of some of the weak banks. And an idea that keeps throwing around at this point of time is really that of a bad bank. So should the government really set funds aside for a bad bank, or is recapitalization of existing banks a better idea?
Yeah, that's a very good question. I think that one needs to look at what is the objective of this exercise. One of the things that has happened ever since, say, around 2014, 15 or so, once the large NPAs had been identified in the public sector banking system, that credit growth has been very low, and of course is now been hampered further by COVID. So the key objective here really has to be to get credit flowing again from commercial banks, and particularly public sector banks, since they still form the largest proportion of banking. And so the key point I'm saying is that you need to get the credit flowing. Now, to the extent that the PSU balance sheets have been impaired because of the existing NPAs, they are therefore further constrained in terms of the credit flow. It is from that point of view that I am a strong supporter of setting up a bad bank, so that you can shift out the pre-COVID NPAs, not the post-COVID NPAs, the pre-COVID NPAs, from the public sector banks or private sector banks that matter, into the bad bank. Now, one point there is that in the normal process, the public sector banks are somewhat constrained or feel reluctant to get rid of the NPAs in terms of the pricing, because they're afraid of the three C's, that is CAG, etc. And the advantage of selling those bad assets, transferring those bad assets at some price to the bad bank, is that then it wouldn't be subject to that, because there would also be a public sector bank, public sector bad bank. And then you need to accelerate the IBC process so that the bad bank starts getting rid of those bad assets in a hurry. So that's sort of the reasoning that I feel that it is necessary to set up a bad bank. And I think that one can set up a sort of citizens above suspicion type of board of the bad bank, like what was done with Satyam restoration, so that it has confidence and all of these activities can be done. One other point I would make is that as we do this, to get the credit flowing, other thing in the budget that I often suggest, and I'm seeing that now, is the government should consider giving something like a 2 to 3% interest rate subsidy across the board for 1 year for all loans. And if you think about it, that's not very expensive, because for, say, 1 lakh crore lending, all you need is 3,000 crores in the budget to do that interest rate subvention. Because I feel that given the current inflation rate, even though it's coming down, it won't be feasible for the Reserve Bank to reduce its interest policy rates further. Also, from the point of view of ordinary citizens, that you can't really reduce fixed deposit rates or savings rate deposit rates much lower. So that the idea there is that you continue with the existing nominal rates, but the lending can be at lower rates, and you also don't disturb the financial markets this way. So what I'm suggesting is a package that is, one, you want to get the credit flowing, so you give interest rate subsidy. Second, take the bad assets of the balance sheets of public sector banks into a bad bank so that they are less impaired and they can start lending again. Also, in terms of their risk assessment, that obviously more projects or more lending becomes feasible on a creditworthy basis if the interest rate is lower for the borrowers, whereas the bank itself, because subsidy gets the market kind of interest rate, and this way and form a bad bank, and this way you stimulate the economy and address some of the financial sector problems at the same time.
Okay, sir. Appreciate you taking your time out. In fact, some of a lot of valid points that you've raised today in our discussion. Here's hoping that Finance Minister Nirmala Sitharaman is also listening to some of them and will be implementing a few of them on her, in her budget speech as well on the 1st of February. But with that, we're completely out of time on this edition of the show. Appreciate you taking your time out and speaking with us, sir.
Thank you very much, Ruchi.